It seems like every time you open the news, there's another massive business deal going down.
It does, doesn't it?
This week, we're looking at one that could have a real impact on something that's probably the biggest financial commitment for many of you listening.
You're talking about our homes.
Exactly, homes.
Right.
We're diving into a huge move in the mortgage world, a deal that's creating a real powerhouse.
That's right. It's the acquisition of Mr. Cooper Group by Rocket Companies.
The same Rocket companies behind Rocket Mortgage, yeah.
Exactly. And this is significant because it's not just a small merger. It brings together two of the biggest players in the mortgage industry.
And that means understanding the details is really key to grasping how it could all play out.
Definitely.
So our goal for you listening today is to get a clear understanding of this $9.4 billion all-stock deal.
That's right.
We've got some great sources for this. A recent article from AP News, analysis from TipRanks, and even a transcript of an interesting conversation about it all on CNBC.
That sounds like a good mix.
So let's get right into it. What is this acquisition all about?
Well, the announcement came out on Monday, March 31st, 2025. And it boils down to this. Rocket Companies is buying Mr. Cooper Group.
Okay.
And it's an all-stock transaction. What that means is that Rocket isn't paying in cash.
Ah.
They're using shares of their own company to buy Mr. Cooper.
So they're basically swapping stock.
Right. And the total value of that stock exchange is a whopping $9.4 billion.
Wow. So how exactly does that work?
Well, they're using something called a fixed exchange ratio.
A fixed exchange ratio.
Yeah. So for each share of Mr. Cooper common stock, you get 11 shares of Rocket Company stock.
So 11 Rocket shares for every 1 share of Mr. Cooper.
Precisely. And that exchange rate is how they came up with that $9.4 billion figure, based on the stock prices when the deal was announced, of course.
Got it. So if all goes according to plan and they expect it to close in the fourth quarter of 2025.
Assuming everything gets approved, yep.
What kind of impact are we talking about here? How big of a player will they be in the mortgage industry?
We're talking huge. The combined company will be responsible for about 1 out of every 6 mortgages in the U.S.
1 in 6? That's incredible.
It really is. Think about all the mortgages out there. This new entity will be handling a massive portion of them.
And it's not just about issuing new mortgages, is it? They're also taking on all the existing loans that Mr. Cooper manages.
Absolutely. Their servicing portfolio, that's the total value of all the mortgages they're responsible for managing and collecting payments on, will be more than $2.1 trillion.
$2.1 trillion.
That's right. That's a massive amount of money and represents a huge number of homeowners they'll be dealing with.
Wow. And that many mortgages means they're going to have a lot of customers.
You got it. We're talking about nearly 10 million clients.
10 million.
It's a huge customer base, and it opens up a lot of possibilities for them to offer other services down the line.
Yeah, it seems like Rocket sees this as a major opportunity to cut down on their customer acquisition costs.
Right. By bringing Mr. Cooper's customers into the fold, they'll spend way less on finding new borrowers.
So instead of spending money on advertising and marketing campaigns to attract new people,
they'll just have access to Mr. Cooper's existing pool of homeowners.
Very smart.
And it goes beyond just getting new mortgages. Their goal is to provide what they call an end-to-end homeownership experience.
So they want to be there for the whole process.
Exactly. From getting a mortgage to managing the loan and everything in between.
It's interesting. They're not just a mortgage company anymore, are they?
Not at all. They're trying to become a one-stop shop for everything related to owning a home.
Speaking of changes, there's been talk about some shifts in leadership as part of the deal.
Yes, Mr. Cooper's current chairman and CEO, Jay Bray, will take on a new role as the president and CEO of Rocket Mortgage.
So he's moving over to Rocket.
He is. And he'll report directly to Varun Krishna, who will stay on as the CEO of Rocket Companies.
So you've got a very experienced executive from Mr. Cooper leading the mortgage side of the business.
Exactly. And it makes sense when you consider how much of their focus is going to be on that side.
Now, what about the ownership structure? Who will actually own the combined company?
Rocket's current shareholders will have the majority, about 75%.
Okay.
Mr. Cooper stockholders will own the remaining 25%.
And I guess that split will be reflected on the board of directors too, right?
You guessed it. The new board will have 11 members, 9 from Rocket and 2 from Mr. Cooper. So we've got a pretty good idea of what the deal looks like, who's in charge, and who owns what.
Right.
But what about the why? What's the strategic thinking behind this move?
Well, there are a few key reasons. First, it's about boosting loan volumes for Rocket.
Makes sense. The more loans they have, the more money they make.
Exactly. And in a housing market where things can be unpredictable, Having a large existing portfolio of loans provides a steady stream of business.
So they've got a built-in customer base ready to go.
Exactly. And second, it's about solidifying Rocket's position in the market. By acquiring a major player like Mr. Cooper, they immediately become one of the most dominant forces in the mortgage industry.
They're not messing around. Not at all.
Yeah.
Another big part of this is the integration of their technology platforms. Mr. Cooper has a very well-established mortgage servicing platform, and Rocket is known for its strength in originating new loans.
And they're really good at using technology to make that process easier.
Exactly. So by combining those two sides, they create a much more comprehensive operation.
So it streamlines things for them and potentially makes things smoother for the customer as well.
Precisely. And of course, they're expecting some pretty significant financial benefits from this merger too.
Like what?
They're anticipating significant revenue increases and cost savings. They think they can streamline operations, use technology more efficiently, and potentially offer more services to their larger customer base. All of that should lead to increased profitability.
It's like economies of scale, right?
Exactly. And they believe this will fuel their organic growth and increase their operating leverage.
Operating leverage, what's that?
It basically means that they can spread their fixed costs, think things like rent and salaries, across a larger revenue base.
So as they grow, they become more profitable.
That's the idea. And this plays into Rocket's focus on artificial intelligence as well. They've been investing heavily in their AI-powered platform.
To make the home buying process smoother, right?
Exactly. They want to make everything from finding a home to closing on a loan as simple and seamless as possible. And by bringing in Mr. Cooper's data and customer interactions, they'll have even more information to feed into their AI and make it even smarter.
We should also talk about the current state of the housing market. It's been a little shaky lately, hasn't it?
It has. We've seen a slowdown due to rising mortgage rates and high housing prices. It's a tougher environment for companies that focus primarily on new mortgages.
So how does this acquisition fit into that?
It looks like Rocket is trying to create a more resilient business model.
By diversifying.
Exactly. They want to offer that one-stop shopping experience so they can capture value at every stage of homeownership, not just when someone gets a new mortgage.
That makes sense. And speaking of acquisitions, we should probably mention Rocket's recent purchase of Redfin.
Ah, yes, that happened back in early March, before the Mr. Cooper announcement.
They acquired the real estate listing company Redfin in another all-stock deal worth about $1.75 billion.
And Redfin brings a lot to the table. They have a huge online presence in the real estate world, with over 1 million for sale and rental listings on their platform.
So you could potentially find a home on Redfin, get a mortgage through Rocket Mortgage, and then have that loan managed by the same company.
You got it. It's all about creating a seamless and connected experience for the homebuyer.
It's a pretty ambitious plan.
It is, but it shows how serious Rocket is about becoming the dominant force in the homeownership market.
So let's talk a little more about Mr. Cooper. They haven't always been known by that name, have they?
No, they haven't. According to the CNBC transcript, they were originally called NationStar Mortgage Holdings, and they're based in Coppell, Texas.
And that name change to Mr. Cooper was a strategic rebranding, wasn't it?
It was. They wanted to make the mortgage experience feel more personal and approachable.
Like you're dealing with a friendly neighbor instead of a big corporation.
Exactly. But one of the commentators on CNBC pointed out, rather humorously, that there isn't actually a Mr. Cooper.
So it's a fictional character.
It is, but it's all about creating a more human image.
So what was the initial reaction in the stock market to this news?
As you might expect, it was a bit mixed. Rocket Company's stock actually dropped by about 3.3%.
While Mr. Cooper's stock went up?
Exactly. Their shares jumped by over 17.5%, which often happens when a company's being acquired.
It makes sense. Investors are betting that the deal will be good for Mr. Cooper.
Right. And the price Rocket is offering usually pushes the target company's stock price up.
Okay, so before I wrap up, can you give us a quick rundown of Rocket Companies itself?
Sure. They're headquartered in Detroit and operate as a fintech platform involved in mortgages, real estate, title insurance, and even personal loans.
They're really branching out.
They are. But their core business is still mortgage lending. In fact, they're the largest mortgage lender in the nation.
They've certainly made a name for themselves.
They have. And their focus on using technology and data to create a smoother home ownership experience has really set them apart.
And our sources indicate their stock has been doing pretty well recently, too.
Right. The TipRanks article mentioned a year-to-date price increase of 22.29%. They also said that an average of around 5 million shares are traded each day.
5 million, that's a lot of activity.
It is, and their current market cap is about $26.01 billion.
Wow, that's a lot of zeros.
So for you listening, what are the key takeaways from this deep dive into the Rocket Mr. Cooper acquisition?
It's a big deal, right?
It is. We're talking about a massive all-stock transaction that will create a giant in the mortgage world. This new company will be handling a huge portion of U.S. mortgages. And it's all driven by Rocket's desire to increase loan volumes, cut costs, and create a more integrated and technology-driven experience for everyone involved in buying or managing a home.
And we can't forget that this is all happening against the backdrop of a challenging housing market.
Right. Rising mortgage rates and high prices have created a lot of uncertainty.
So this acquisition looks like a strategic move by Rocket to solidify their position and expand their reach across every aspect of homeownership.
Exactly. And when you consider their acquisition of Redfin, it paints a pretty clear picture of their strategy. They're building a comprehensive ecosystem for everything related to buying, financing, and managing a home.
So for those of you listening, whether you own a home or are thinking about buying one in the future, this deal could have a real impact on you.
It raises some interesting questions about what the future holds for mortgages. With fewer but much larger companies controlling so much of the market, it could change how lenders compete, how quickly we see innovation in loan products, and even the overall experience of getting a mortgage.
It's definitely something to keep an eye on. As we see these major players expanding their influence, it's worth thinking about how this could reshape the whole process of buying and managing a home in the years to come.
What could be some of the unexpected benefits or downsides of having these massive companies playing such a dominant role in the market?
It's a question worth pondering as the housing landscape continues to evolve.
Absolutely. It'll be fascinating to see how this all plays out.
Well, thanks for breaking it all down for us. This has been a really informative deep dive.
You're welcome. It's an exciting time in the mortgage industry, and I'm sure we'll be talking a lot more about this in the future.
You're probably right. That's it for this deep dive. Thanks for listening.